Hey, what is going on, guys? My name is Nick, and in today's video, I'll be talking about Facebook stock's recent Q3 earnings report, along with the key details that I picked up from the conference call, and then at the end, I'll be sharing my thoughts on whether Facebook is a buy or a sell right now. This video is going to be a little bit different from my normal style because I wanted to get this out as quickly as possible to you guys, so I apologize if the edits aren't the best. Anyways, if you do enjoy, don't forget to smash the like button and subscribe if you haven't already to the channel. And without further ado, let's jump right into the video. Alright, so I wanted to start out by sharing my own Facebook stock position because it's important that you guys know that I have my own skin in the game and I take this investment quite seriously. So right now I own 22 shares of Facebook in my tax-free savings account here in Canada, which has an average cost of $238 per share, worth about $6,900 US. Also, I own 31 shares of Facebook in my margin account, which has an average cost of about $310 per share, worth $9,700 US. So in total, I own 53 shares of Facebook with a total value worth about $16,700 US. So clearly this is a huge position in my portfolio and I'm very bullish on the stock, as you can probably tell. And I actually bought 5 shares on the dip today at about $312 per share, which is included in that total. But now let's jump into the Facebook earnings and figure out if they're worth buying or selling or holding or whatever. Alright guys, so right in front of us here we have the third quarter 2021 financial highlights. Just to start out here, Mark Zuckerberg said, "We made good progress this quarter and our community continues to grow. I'm excited about our roadmap, especially around creators, commerce, and helping to build the metaverse." Now getting straight into the numbers, here we can see that Facebook posted total revenue of $29.01 billion, which was a 35% increase year over year. Then they posted $3.22 of EPS, which was a 19% growth rate year over year from $2.71 last year. Now, if we compare this to what analysts were expecting, they were actually expecting $29.57 billion. And so this was a slight miss on revenue, but luckily they did slightly beat on EPS with $3.22 versus $3.19 expected by analysts. So here for the Facebook daily active users, we can see that they grew to 1.93 billion in the quarter. And actually in the US and Canada, they continued to grow where it was pretty stagnant over the past few quarters. So this is actually really good to see that we're not seeing a drop off in the US and Canada like many people might have expected, because a lot of people hate Facebook. Then in terms of the Facebook monthly active users, just for the Facebook platform, they grew to 2.9 billion users worldwide. And again, here we can see that US and Canada actually grew by 2 million for monthly active users, which is a really good sign. Now, if we compare these numbers to what the street was expecting, analysts were expecting 1.93 billion for daily active users. So this was right on target there. But then for monthly active users, Facebook slightly missed with 2.91 when the street was expecting 2.93 billion users. Moving along now to the Facebook average revenue per user, or the ARPU. This is essentially the amount of money that Facebook generates per user on the Facebook platform. So worldwide, they generated $10 per user of revenue in the third quarter, which was slightly below analyst estimates of $10.15 per user, so that was also a slight miss. So as we can see here, based on the 5 main metrics, the revenue, EPS, daily active users, monthly active users, and average revenue per user, Facebook missed on 3 of these expected metrics, and then they beat on EPS, and then basically was in line on the daily active users. Now in terms of the share repurchases, Facebook repurchased $14.37 billion worth of stock in the third quarter, and then they had $7.97 billion remaining on their prior share repurchase program as of the end of September 30th, 2021. But the best part about this is that they actually announced a new $50 billion buyback program, which is absolutely huge, and investors really loved this. This was probably the main reason why the stock was up after hours when they reported earnings, but then obviously today the stock was down about 4 to 5%. So I'm really happy with this because the management clearly knows that the stock is undervalued and they're willing to purchase at these prices and are putting their money where their mouth is. Now overall, I would not have graded this earnings report as incredible by any means, because they barely beat on EPS, and then they were in line with the daily active users, but they missed on most of the other metrics, as we can see. So obviously I wouldn't say this was an incredible earnings report, but it was okay and basically in line with analysts. It's different from usual though, because Facebook usually blows analyst expectations out of the water, but because of these Apple iOS changes and the slowdown in e-commerce and advertising growth, this has definitely impacted Facebook, as we can tell. But obviously, like I said, the newly announced share repurchase program program is a huge positive from this earnings report, and I think it's definitely going to prop up the earnings per share in the next quarter. All right, so now let's jump into some of the key points that I gathered from the conference call, because I listened to it basically twice over and tried to gather the key points so that you guys could be informed. And they actually revealed quite a lot more than you would have expected on this conference call, so stay tuned. He started by saying that 3.6 billion people actively use one or more of Facebook's services worldwide on a monthly basis. So here we can see from their family of monthly active people, 3.58 billion people use their products at least once a month in the third quarter. And based on the world population of 7.9 billion people right now, we can see that 45% of the world uses at least one of Facebook products at least once a month, which is absolutely insane, guys. The huge moat that Facebook has with the network effect just keeps expanding and growing into more and more of the world. And that is one of the main reasons why I'm so bullish on Facebook, because of their network effect and the fact that they can continue to grow being this large. Moving along, Mark Zuckerberg stated that criticism helps make Facebook better. So obviously they're always in the media spotlight, and people are always saying bad things about Facebook, but this actually helps the product to get better over time because the company takes on that criticism and uses it to positively improve their products. Mark also said that they're on track to spending more than $5 billion on safety and security in 2021, which is a really good sign. And then he also wanted to highlight that Facebook systems are the most effective at reducing harmful content across the industry. So basically, through Facebook's prior investments in machine learning and artificial intelligence, and obviously that spending on $5 billion in safety and security, they have been very effective at reducing harmful content. Now, Mark goes on to talk about Facebook's three main product priorities right now, and those are creators, commerce, and then building the next computing platform, which would be the metaverse. So obviously the metaverse is a huge focus for Facebook right now, and I think they plan on hiring over 10,000 people with metaverse related jobs. And Mark can see that there's going to be a huge demand for digital and physical goods related to the metaverse in the future. He then said that Reels is the primary engagement growth driver on Facebook and Instagram right now. So as we all know, TikTok is huge and they're just growing in market share like crazy, and they're definitely one of Facebook's biggest competitors. So Facebook has been focusing on Reels like crazy, and they say they will be as important as stories in the future, and that there are big changes coming to Instagram and Facebook to further lead into video focus and making Reels a more important aspect. Mark Zuckerberg also sort of addressed the problem where a lot of young teens aren't as active on Facebook anymore, and that's what some of the leaked data was that came out. And he said that Facebook went from being a platform mainly focused for young adults to expanding to a broader audience, and that is part of the reason why. But then in the future, the services are going to become stronger for young adults, which are in the ages of 18 to 29. Then he goes on to talk about the metaverse again, and his goal is to be able to reach 1 billion people and hundreds of billions of dollars in digital commerce this decade. But it will be a long road ahead to build the platform with all of the VR, AR, and everything else associated with it. So I think that this will be a huge growth driver for Facebook in this decade, and obviously with these hundreds of billions of dollars in digital commerce, Facebook will be taking a share of that revenue. And so this is going to be a great growth driver for them. And that led him to saying that there's going to be a new reporting structure for the Q4 earnings report. So the family of apps, which is Facebook, Instagram, WhatsApp, and Messenger, those results are going to be separated from the Facebook Reality Labs, which essentially includes Oculus, artificial reality and virtual reality, and the metaverse stuff. And this will basically allow investors to have additional visibility into Facebook Reality Labs, investments, and their revenues in the future. So we'll be able to see that huge growth coming, obviously, in a few years. And finally, he said that throughout 2022, they're probably going to see a reduced operating profit by about $10 billion due to the increased investment in Facebook Reality Labs. And he said that this investment in Facebook Reality Labs will continue growing for many years, so this could be a recurring trend over the next few years. And I do believe this is one of the main reasons why Facebook stock is selling off, because they're going to be seeing that operating profit hit in 2022. And obviously that's not a good sign for the short-term investors. But over the long term, this is obviously great news because they're investing heavily in new technologies, and this could be a huge growth driver for them coming in the next decade. All right, now moving along, Sheryl Sandberg, who is the COO of Facebook, she had a few comments to say. So she said, Facebook is facing two main challenges right now. The first is the accuracy of the ad targeting has decreased because of the Apple iOS 14 changes, which increased the cost of driving outcomes for their advertisers. And then the second is measuring those outcomes became more difficult. And then after that, she went on to say that Facebook is continuing to make tools for their advertisers to be able to manage through these changes. And it will be a multi-year process, but they will be able to get around a lot of these issues that Apple has caused. She also said they're making privacy enhancement changes to reduce the required personal information processed while still allowing them to show relevant ads in 2022 and beyond. So this statement here is very good for Facebook's PR, because they're very well known for gathering a lot of personal information from people, and that's very frowned upon in the industry. But if they're able to provide relevant ads without gathering so much personal information, that's obviously a great sign for Facebook, and it will make them look a lot more positive in the media. Because of the iOS changes too, Facebook was underreporting the iOS web conversions, so sales and app installs are higher than what's being reported for the smaller advertisers. So that is an issue that they're going to be able to fix by the end of this year and moving into 2022. One of the other big issues that Facebook is seeing right now is the slowing e-commerce growth, so it's no longer at the pace of the pandemic growth, and it's also compounded by the supply chain issues. So if companies can't get their supply out to their customers, they're obviously not going to be advertising as much because the demand is clearly there, but they don't have the supply. So that is also an issue that affects Facebook. And finally, if Apple's iOS 14 changes didn't occur, Facebook would have seen quarter-over-quarter revenue growth. So from their revenue presentation here, we can see that Facebook's revenue was basically in line with last quarter, but it dropped slightly. But back in 2020 in Q3, the revenues were quite a lot higher than in Q2, and this was in large part due to coming out of the pandemic and seeing that huge growth, along with the advertising spend just ramping up for that holiday season. But again, here we're seeing that revenue drop slightly because of the Apple iOS changes. Cheryl then goes on to say that more than 60% of video revenue comes from mobile short form vertical view, like Reels, so basically 15 seconds or less. More than 60% of the revenue they generate comes from that. So that is very good to see, and they're definitely competing very well with TikTok. Over 2 billion people per month now watch video that are eligible for in-stream ads. So clearly Facebook is growing its video ad platform, and this is a very good sign because YouTube is doing extremely well with those in-stream ads. So I think Facebook could see a lot of this success as well. Then moving into the holiday shopping season, Facebook will be offering exclusive gifts to shops and then discounts and free shipping offers to buyers. So this is really good. And then she also says that the Buy Black Friday event is coming soon. So they have a lot of things planned for the holiday season, and she's super excited about it. Finally, moving on to what the CFO Dave Wenner said, the rest of the world ad revenue growth was largest at 50%. So basically meaning outside of North America, it was the highest growth that they saw. The number of ad impressions grew 9%, and the average price per ad increased 22% year over year, which was very good. Again, Facebook is seeing three main headwinds: the Apple iOS 14 changes, e-commerce growth slowing, and then COVID resurgences in other parts of the world. Facebook had 4,700 net new hires in Q3, which were mainly in technical functions, and then they were now at 68,100 full-time employees. Facebook has $58.1 billion in cash and cash equivalents on the balance sheet at the end of the quarter, which is excellent. And then in terms of the outlook, the Q4 revenue growth is supposed to be 31.5 to 34 billion, which is only about 20% revenue growth. And then the non-ads revenue is supposed to be down year over year in the fourth quarter because of the Oculus 2 launch last year. And then he also says that they're going to have huge CapEx growth, which could be 55 to 75% in 2022, as they are focusing a lot more on AI and machine learning improvements for better recommendations in their feeds. Finally, I just want to go over a few key points from the Q&A because these are very important as well. So they said that they're just starting to roll out Reels ads on Instagram, and they're basically just starting out with Reels on Facebook, and they have not even yet monetized Reels on Facebook. So there's tons of growth there to be able to be seen in terms of ad revenue growth. The company said they must rebuild the targeting and optimization systems to adjust for Apple's iOS 14 changes, which could be a multi-year program. Mark said that the metaverse will not be a profitable investment at any point in the near future. He says that the next 1 to 3 years will be product development focus, and then 10 years will be a business story. So that's when you're going to start seeing the profits rolling in, and once they have all of those products developed and they're able to start monetizing them. And they go on to say that 2022 margins are going to be lower than in 2021, obviously because of this investment in the metaverse and yeah, just overall huge CapEx investment and lower operating profits. Mark also said that he wants VR and AR technologies across all of the platforms, so the family of apps. So in the future, we're going to be seeing a lot of VR and AR technologies built into Facebook, Instagram, Messenger, and WhatsApp. So Mark was asked if they had made any progress since 2019 to be able to remove bad content in terms of safety and security. And so obviously he said there has been huge progress made to remove bad content, and nowadays about 90% is removed by their artificial intelligence bots, whereas the remaining amount is kind of hard to find and they're still working on that, and they have to remove it manually. And finally, they're creating 10,000 jobs tied to the metaverse, which is obviously part of that huge investment that they're talking about in 2022. Overall, guys, what are my thoughts on Facebook? Well, I think that Facebook is still an extremely solid company with tons of growth ahead of it. As we saw in this earnings report, the company was still able to grow its revenue at 35% year over year, along with its EPS growing at 19% year over year, despite all of the Apple iOS changes and the difficulties in slowing e-commerce and online advertising growth. So I think those were really good numbers despite all of the issues. And I believe that Facebook did the right thing by adding to their share repurchase program another $50 billion that they're planning on buying back of stock, which at this time, it actually represents just over 5% of their market cap. So this clearly shows that management thinks that Facebook is undervalued, and it's definitely a good buy right now. But I do think that because of the expected $10 billion reduction in operating income in 2022, along with the huge capital expenditures, investors are a little bit worried about the short-term growth of Facebook and their profitability. But of course, having a long-term mindset on Facebook stock, this presents a great buying opportunity like it has in every single time that Facebook has dropped over the past 5 to 10 years. Just look back to 2019 when the stock dropped over 20% in a day because management said short-term profitability would be hit as they focused on investing more into privacy and security. It was, of course, a buying opportunity. So overall, yes, Facebook is still a very high conviction investment for me. And I plan on continuing to buy as long as the PE ratio stays in the low 20s, which I think is a steal of a deal right now. But let me know what you think. Do you think that Facebook's undervalued right now? Do you think they're overvalued or they're fair valued? Like, what do you think the growth is going to be over the next 5 to 10 years? Just let me know in the comments down below. I would love to hear it. Anyways, if you did enjoy, don't forget to smash the like button and subscribe to the channel if you haven't already so you don't miss any of my future uploads on investing content just like this. And with that said, thanks for watching, guys, and I will see you guys in the next one.